Hello students, coming for this video, let me directly go for reading the question. I'm not going to say what actually the difference is, so let us come across while doing it. The Rajesh Trading Company Limited issued 10,000 shares of rupees 10 each at a premium of rupees 2. So this is going to be at a premium. It is the same entries, there is no change, and it is very easy as there is no equity or preference mentioned here. So let us see the next. On application, it has been issued at rupees 2. On allotment, 6 including premium. So allotment rate is 4, premium rate is 2. So you have to divide it. On first and final call, it is rupees 4. All the shares were subscribed and the money duly received except the first and final call on 1,000 shares is the same. Let us see what is the difference next. These shares were forfeited and only 800 shares are reissued. See, the calls in arrears, one of a shareholder failed to pay 1,000. They have cancelled it. Cancellation entry, there is no change, the same. But reissue entry, the share will differ. Instead of taking 1,000, so far we used to take entry 7 and 8 will be the same calculations, but here it's going to differ. Instead of 1,000, the reissue share will be for 800. Okay, so let us observe. It reissued at rupees 8 per share, fully paid up. Pass the journal entry. So let us see how actually we are going to do this. Going for the solution. Heading, journal entries in the books of Rajesh Trading Company Limited. Always remember that heading is very important to be written with the serial number, particulars, debit and credit column. So the marks are also included for this. First entry. Going for the application receipt entry, application money received. What comes in? Bank account data. 2 against what are we giving? Share application account. So we are going to go for the calculation. What is the number of shares issued here? 10,000. 10,000 into the rate on application is 2. Going to be 20,000. And the narration being application money received. So first entry is very simple. We have done it. Next, moving on to the next entry, the transfer entry. Application what is being received, we are going to transfer to the share capital. So application, that is share application account data to share capital account, the same value is going to be transferred what is received. So whatever we receive is what going to be transferred. Being application money transferred. So there is no changes. The entries are very simple. Observe. Next. Moving on to the share allotment. Let us observe the question now. Allotment, we have 6 rupees including premium. So coming for the allotment entry, it is going to be share allotment account data to share capital account to securities premium account. Now we are going to go for the calculation. 10,000 shares, the whole amount for allotment was given as 6. So when we are going to transfer it to the share capital, what will be the value to be transferred? 10,000 into the actual value of the allotment, that is 4, because premium rate is going to be 2 rupees. So if you people doesn't know, just take up the full value, then the premium, and from this if you minus, this will be the actual value to be transferred to the share capital account. So now let us go for the calculation. It is 60,000, 40,000, and then 20,000. Just observe the debit and the credit total should be equal. So share allotment account data to share capital account to securities premium account being allotment money due. Now let us move on to the receipt entry. Coming for the receipt entry, there is no change. Bank account data to share allotment account. Observe what is actually the value under the allotment column, 60,000. That is what we are supposed to take always. This will change differ in case when it is a discount. So being allotment money received. We have done this. Now let us move on to the next entry related to first and final call. Before that, let us observe what is the rate given in the question now. For on first and final call, rupees 4. So keep this in your mind. Going for first and final call. Due entry. Always remember first will be due right from allotment. First is due entry and then only it is receipt entry. So it's share first and final call account data to share capital account. 10,000 at rupees 4. It's going to be 40,000. So due entry is 40,000 being first and final call money due over. Next step. Observe. Moving on to the bank, that is the receipt entry of first and final call money. We have to check what was actually being holded on arrear, that is which was not received, 1,000 shares. So keep this in the mind. Moving on to the bank account, 10,000 minus 1,000 shares, we get 9,000 at rupees 4. So this is a due value, but what actually we are receiving for 9,000. 9,000 into 4, 36,000 is what is received. Next, what is not received? We have to make an entry. Calls in arrears account data. Always whenever you have arrear, it will be debited. Show both. What is received, what is not received will be debited. So here what's not received, 1,000 is not received, the same rate. It's 4,000 that's not received. So the actual value to be received is 40. So out of 40, 36 is received. Holded is going to be 4,000. Observe the narration. Being first and final call money received. You have to concentrate more on when premium is given under allotment, discount is given under allotment. Apart from that, any shares that is being arrear, that is holded on or failed to make the payment for first and final call right from right from entry 6, 7, 8, you have to concentrate a lot. Keep revising the entry so it's easy. If you practice, it's easy. Let us move on to the next entry. Now, coming for cancellation entry, 7th one. This is what been arrear, that is going to be cancelled. Now, share capital account data. What is debited is going to be credited to calls in arrears account to forfeited share account. 1,000 shares at a face value of rupees 10. See, premium we need not show here because it is not going to affect. So I have not taken that. Next, 1,000 into what is called in arrear rate 4. So the balance is going to be here 1,000 into 6. Observe, The face value is going to be 10. Calls in arrears is 4. So 10 minus 4 gives us 6. We're going to write the values now, the cancellation. 10,000, 4,000 and 6,000. So being unpaid, shares forfeited. Next, moving on to the reissue entry now. Coming for the reissue entry, what's received cash is coming in. So it's going to be bank account data, but the receipt share is not 1,000, it is 800. For the confirmation, let us just observe once. 800 shares are reissued at 8. We have to take only, this is only small change. Whatever the instruction is given, we are just going to follow that. So instead of 1,000, we are going to take 800. 800 into 8, the 6,400. So forfeited share account data. We doesn't know what actually is going to be forfeited here. So let us move on to the next two. Share capital account saying take 800. What actually the instruction is given, the same has to get affected everywhere. Clear? So 800 into the face value is 10. So now the difference is going to be 800 into 2. So 10 minus 8 gives you 2. So it's going to be 6,400, 1,600 and total is 8,000. Just observe bank account data, forfeited share account data to share capital account being forfeited shares reissued. Next, moving on to the last entry, forfeited share account data to capital reserve. Let us just observe whether it is a profit or a loss, concentrating on forfeited year. $6,000 is a credit value. $6,000 minus, so what is the debit value? 1,600. 6,000 minus 1,600 gives you 4,400. So we have a profit on the reissue of these cancelled shares at rupees 4,400 being balance transferred to the capital reserve account. So we have completed this calculation. Listen students, depending upon the question and the instructions, we have to just follow the calculations. Only the calculations will differ, but the journal entry is the same repeatedly right from the beginning. Okay, application, allotment, first and final call, then you have cancellation, then you have reissue, and then you have transfer to the capital reserve account.